Suzano, a giant in the pulp and paper industry, has been overlooked by the market despite its deep competitive advantages. Good afternoon. We are Fundac Getulio Vargas, representing CFA Society Brazil, and we are initiating coverage of Suzano with a buy recommendation and a 67 reais target price, a 29% upside from last week's closing. Suzano is the world's largest pulp producer, holding over 30% of the world capacity. The company has a very well-diversified global revenue stream with a fully verticalized operation ranging from forestry cultivation with over 2 million hectares of land in Brazil to the delivery of several paper products. Climate change is a reality, and Suzano is part of the solution. With plastic and other fossil-based materials at target, wood fiber became a prominent product in the development of sustainable alternatives, with over 10 million tons of competing addressable market to be generated in the next 10 years, placing the pulp and paper industry as one of the best commodity markets to be exposed to. Our buy recommendation for Suzano lies on 4 key catalysts we believe the market has overlooked. First, Suzano holds an irreplicable low-cost position in Latin America. Second, in face of short-term challenges, the market became overly pessimistic regarding the long term of pulp prices. Third, with accretive capex at the development of a new mill named Cerrado, Suzano will become an even more resilient company. And fourth, the company is still under-recognized in terms of its ESG position.
Now, let's dive into our first pillar, Suzano's unmatchable position in Latin. With a massive size, Suzano is ahead of its competitors both in capacity and productive lands. But for the company, larger doesn't mean less efficient, as it achieves one of the lowest cash costs in the industry. But how is that possible? The answer is Brazil. Eucalyptus, the major raw material for pulp production, is not an easy tree to grow efficiently, needing very specific climate conditions. To measure that, we used world climate data to build our proprietary Eucalyptus Attractiveness Index and concluded that Brazil is the only country that offers excellent climate conditions, adequate infrastructure, certified land, and geopolitical stability. Enjoying one of the best climates, Suzano's forests achieve an extremely high productivity in a shorter plantation cycle. In addition, the land availability in Brazil makes it possible for Suzano to use its own wood as a primary source, reducing costs and protecting from rise in wood prices, ensuring excellence on its return on invested capital. But how deep is Suzano's moat? Farmland prices in Brazil have tripled, just after Suzano's major acquisition of land in the merger with Fibria. So, we used web scraping to develop a land valuation analysis of Suzano's current force and estimated that, with a market price of 50 billion reais, it will take over 4 times the EBITDA of the second largest player to replicate Suzano's position, assuring its irreplaceability. Still, when you look at the trading EV/EBITDA premium to international peers, the market doesn't seem to properly recognize Suzano's position, with a discount below 1 standard deviation of the average.
Moving on to our second pillar, we see overly pessimistic pulp price expectations, providing a good entry point to Suzano. Pulp prices behave in cycles, with capacity additions being announced at high prices and high-cost producers getting out of the supply network during market downturns. This poses the industry cash cost as the lower bound of pulp prices' downward spirals, creating a natural gross margin advantage for Suzano. Currently, we're watching the rollout of 3 major projects in Latin America, making the market question whether pulp demand can absorb this new capacity. But is this fear reasonable? To address this question, we built our proprietary supply-demand model, in which we do recognize a challenging short-term for Suzano with an oversupply in the next 2 years. However, the future lies in 2 key points the market is missing. Will there be space for new capacity additions post the oversupply, and how will key demand drivers develop? By mapping all eucalyptus plantations in Latin America, we concluded that, after Cerrado's rollout, no country will have sufficient wood supply to accommodate another big pulp project. This difficulty should benefit highly integrated players on wood, such as Suzano, who is sitting on an industry that should catalyze growth from Asia tissue consumption and fossil fuel substitution. But even with all these positive catalysts, the market still seems to be swapping the long-term position for short-term uncertainties. Suzano is currently trading at an implied 540 pulp price, a level well below both historical average and our forecast of 575, creating a margin of safety for the investment in Suzano.
In our 30 thesis with Cerrado, Suzano's new pulp project, the company will enhance not only production, but also efficiency gains and results protection. The results of pulp and paper companies are volatile and entirely driven by variation in pulp prices. In low cycles, margins are compressed and performance is significantly impacted. In this scenario, the only way to guarantee resilient result is by minimizing cash cost, and for us, this is the main advantage of Cerrado. More than a 20% increase in capacity, Cerrado will provide superior energy generation and new logistic solutions. Also, the distance from forest to mill will be reduced to 6.5 kilometers, the best in the market, meaning more efficiency and a huge reduction on cash cost. So, to effectively measure this efficiency, we analyzed what would be Cerrado's performance with the lowest pulp price of the past years. And in this scenario, Cerrado would generate a 19% free cash flow margin compared to 4% of current mills. However, cash generation does not necessarily mean a good project investment, but for Cerrado, the 22 billion reais capex was worth it. Considering sensibility on dollar and pulp prices, we estimate that the project does not generate value only with very pessimistic assumptions. So, why does the market still doesn't value Cerrado? It's always on the leverage. Historically, projects of great capacity have resulted in an average rise of 1.4 of company's net debt to EBITDA. However, for Suzano, this hasn't been a reality. Suzano announced this new project while still in a deleveraging process after the Fibra merger, but we don't see that as a stoppage. For us, accounting for Cerrado capex without considering the project EBITDA generation is not correct. So we made this adjustment and saw the company is still following this debt reduction trend.
We also observe Suzano's ESG efforts, which we believe are not fully recognized. Suzano's core business is ESG-centric, and our proprietary analysis confirms that. The company excels in supply chain management, biodiversity, and carbon reduction. It also excels socially, leading labor management. Governance-wise, Suzano shines with a qualified board guided by a respected family, earning a top score in our 18 criteria ESG index. The company effectively turned its ESG commitments into tangible benefits, showcasing one of the sector's lowest cost of debt through efficient use of ESG-related bonds. This excellent position made us apply a discount to Suzano's cost of equity, based on the paper establishing ESG as a risk premium. By factoring Suzano's advantage in both cost of debt and equity, we estimated the company generates 6 billion with its commitments. But, with all those efforts, why under-recognized? It all relies on MSCI rating. The agency punishes Suzano in aspects that it excels, and it sees Suzano's big improvement in biodiversity and use and accretive ownership by the Pfeffer's family expertise and long-term alignment, evident by major executive compensation being variable over the last 3 years. Thus, we believe Suzano could undergo a rating soon. In view of our proprietary analysis of over 6 ESG assets, Suzano could appreciate this possible rating and also benefit from the increase in ESG investors, especially those mandated with the MSCI rating. Suzano has also an unexplored potential in Brazil's carbon market, which is set to unlock a 10 billion reais market for the company, being a big upside risk, reinforcing our thesis that Suzano's ESG is under-recognized.
Now, accounting for all those catalysts, we used a blended valuation approach to reach our 67 reais target price. This is the output of a free cash flow to equity DCF, a relative valuation considering historical EV to EBITDA premium to international peers, and a sum of the parts, in which we value Suzano's current pulp business, paper, and its new initiative in Cerrado from a granular, bottom-up financial forecast. Getting into the numbers, we expect a modest 3% revenue CAGR from the cycle peak of 2022 to 2033, mostly driven by the rollout of Cerrado, pulp price normalization, and the paper mix diversification, with margins stabilizing below the price peak of the last 2 years. We incorporated the pillars of our investment recommendation to several of our forecasts, where Suzano will further strengthen its position within the industry and normalize its margins post-2025, with a 575 long-term pulp price extracted from our proprietary supply-demand model. Even though we applied conservative assumptions, we stressed our model to different possible outcomes, where Suzano could underperform in a scenario considering a structurally lower pulp price or a significant appreciation of the Brazilian real against the US dollar, which are the two most sensitive assumptions to Suzano's business. Addressing the most significant risks to our recommendation, we see lower pulp prices for longer or a possible bad capital allocation strategy after Cerrado as the most significant. However, we view those as highly unlikely, given our supply-demand model showcasing a balanced scenario after 2025 and considering the excellent track record of good decisions made by the management.
The key to thrive in commodity markets is not to predict cycles, but to overcome them, and Suzano gives a masterclass on it. We reiterate our buy recommendation due to Suzano's unmatched low-cost position, pessimism regarding pulp prices, a new project to get to future cycles with stronger cash generation, and its under-recognized ESG position with potential to enhance benefits from green capital markets. Thank you, and are open to questions.
First, thank you for your presentation. That was very useful. My first question, I want to ask you to talk a little bit about the competitors, as well as any risk of substitute products as, pulp and paper, overall market. So could you talk a bit about that?
Okay, thank you for your question. Talking about competition, if you can please move to page 39, sorry. So talking about competition, the key differentiator for competition on commodity markets, it is the lowest cash cost in the industry. So we see that Suzano is positioned very well in this scenario because it has the largest forest in the industry, which allows Suzano to have a huge portion of owned wood. Owned wood represents a huge portion of its cash costs. So by having this amount of owned wood, Suzano is able to achieve higher margins, higher return on invested capital.
And now, if you can please move to the fossil to fiber substitution. Yeah, so, now this one.
First, 93.
93. Yeah, so as you've mentioned about substitution product, we see that Suzano is especially positioned because the pulp that Suzano produces is not the product that's going to be substituted, but the product that's going to substitute. Why that? We see that recently plastic are materials that are not ESG, are not good for the environment, so they are not ESG positive. So we see that changing plastic and fiber products into paper is a much better ESG position. So we see that this trend of substituting plastic product into paper one is very beneficial for Suzano.
Okay, thank you. Coming back to your last sentence, yes, paper is seen better than plastic in terms of environment, although if you are speaking to somebody from Africa, they might have a different opinion. But what we can see is that in general, worldwide, we are trying to limit packaging more on the plastic side, but also on the paper side. Second thing is that there are various efforts, so far maybe not very successful, but there are, regarding limiting of paper. By the way, as you can see, it's only myself here having paper printed reports. My colleagues don't have them. So this might also be not very favorable environment for the company. So my first question would be your idea about the risks regarding on limits of paper used for printing, and in generally the trend to limit packaging of goods.
Yeah, so if we can please move to page 114. So basically, we do see, as you've mentioned, printing and writing is a market of paper that is going down. As we mentioned, digitalizing things is in a much better position than paper. However, Suzano especially produced the majority of its pulp that is therefore transformed into paper for tissue, which is paper for toilet reasons. And this is a market that is
also being limited.
Yeah, but it's a market that is growing a lot. So especially on Asia, we see this as a big assurance that the growth in the market is going to keep happening. Although, of course, there are limitations, but as Suzano is specialized in tissue, this is very good for the growth of the company.
Yeah. If I can complement on that answer, if you can please move me to page 57. So in our model, we basically modeled the supply and demand growth, and we were very conservative regarding our demand growth estimates, and we included this target price that should balance the model at 2025 into our long-term price. So after 2025, we are very conservative with a tighter market. It's going to be hard to implement those restrictions on the supply of paper in case of this growing need for basic consumption such as tissue.
If I may. You mentioned a lot of risk, which I appreciate, we appreciate, but it lacks one of them, at least for me. The company is operative in quite environment-intensive industry, operating on large plots of land, planting trees, and so on. Why you don't include, or what's the reason you don't include the risk for environmental regulation, which may affect companies' activity in the future, both on a local Brazilian or maybe even state of Brazil level and on global level, which also may influence, for example, the legal aspects of using rainforests for industry in the near future.
Thank you for your question. If you could please move with us to page 83. We see that as a risk, but Suzano has all its forests regulated by FSC, which is the main regulator in the sector, and all Suzano's forests, including all its 2.5 million hectares of land in Brazil, are certified by FSC, which is the main regulation that paper companies use to buy its pulp in the market. So we see that as a risk, but Suzano is very well positioned regarding this risk.
I have a question on farmland prices. I think the Cerrado expansion actually came with low costs. However, going forward, for the future capacity expansion might be capped due to high farmland prices. Do you think that the Cerrado expansion is already fairly priced into the stock right now?
Yeah, so basically, if you can go to farmland prices. It's page 47. So basically, Brazil is a commodity country. A lot of commodities are produced in Brazil. And this rise on farmland prices, well, mainly because the boom of commodities during the pandemic and also Russian and Ukrainian war. So we see that though the farmland prices are high now, we don't see this in perpetuity. So in the future, where Suzano is going to expand, because as we've mentioned, expanding now is not strategic because there's a lot of oversupply in the market. But in the future, where new projects are going to come into the market, it would be easier to expand since this price is not, we cannot perpetuate this high on farmland prices as it is linked to the boom of commodities.
First, I certainly want to acknowledge the work that you did on the ESG standpoint. This probably wasn't an easy one from the E standpoint at least, but we'd love to give you an opportunity to talk about the S&G part as well.
Okay, so if we can move to page 80. Okay, so to assess the ESG part of Suzano, we see that the company is really well positioned regarding all three aspects of ESG, but we wanted to materialize these initiatives of Suzano into our model and into our prospects. So we incorporated ESG into our cost of capital. Through cost of equity, we attributed a premium based on a paper named Establishing ESG as a Risk Premium, which says that a 1% deviation from the sector mean would equal a 1% premium in the cost of capital. So we attributed this discount. And also regarding the cost of debt, Suzano is 40% of Suzano's debt is ESG related, and the cost of this is much smaller related to other options for the company, so it reduces a lot their cost of capital. And we calculated like the NPV of Suzano's ESG initiatives through the difference between the normal weighted average cost of capital and considering ESG, reaching the 6 billion reais. So
just complementing, a huge part of Suzano's ESG-linked bonds is linked to social aspects. Suzano was the first company in Brazil to link its bonds to social aspects. So it is a very good company in this aspect. If we could please move back to the appendix section and go to page 85. Pfeffer family, which is the controller of Suzano, is very well seen in Brazil. The company has more than 100 years and has a lot of history in doing good decisions, especially when Suzano went to the highest standards of governance in Brazilian stock market without any control premium. So it was very well seen in the market. And when Davi Pfeffer, which was the Suzano CEO, grandson of the founder, stepped away from the CEO role to a professional CEO, which was very well seen in the market too.
If I understood correctly, please tell me if I'm right or wrong. You have a lowered weighted average capital cost due to ESG reasons, based on the discount of in interest rates of real bonds, or this is some sort of your models?
Yeah, so basically, if we can please move with me to page 91. So basically what we did to estimate the ESG NPV is we took what would be Suzano's cost of debt if it hadn't any green bonds. So green bonds are bonds that are typically not very liquid on secondary markets. And we estimated this cost of debt through the issuance cost of those bonds just that is the real interest rate that Suzano is going to have. And we estimated what would be Suzano cost of debt if it hadn't had any of those bonds. And we calculated the weighted average cost of capital in the case that it hadn't any premium on ESG and those bonds. And we, based on the difference of enterprise value, we reached that the NPV of the ESG would be around 6 billion.
So where did you get the premium from?
Yeah, the premium is basically on Bloomberg. We had access, and we basically estimated what would be the difference from a regular bond and a normal bond based on the cost of issuance.
Yeah, the premium of those ESG bonds are related. They happen because of they are sustainable. So because of the aspect of sustainability linked into those bonds, they do have a lower interest rate, as you've mentioned. So this is specific because of the nature of the capital that is going to come with the bond, that there is this decrease on interest rates.
So you simply adopted the premium from Bloomberg to your implied interest rates, right? Okay. If we still have time, if you could please address, you mentioned the owner or the majority shareholder of the company is a family, which is good on one hand, but on the other hand, when you have one majority shareholder being a family, you may incur numbers of risk. How do you see them, and how the company deals with them?
Thank you for your question. If you could please move to page 86. We do see that as a risk. However, Suzano has a big free float in the market with a range of 50% of free float. And like I said, the family is very well seen in Brazil, and we see that as a point of long-term alignment, as the family has been in the company for more than 100 years. So we see that as a long-term alignment, with combining the fact that Suzano has a huge free float too.
Pulp prices are no doubt impacted by macroeconomic cycles and commodity cycles. What have you factored into your longer-term price forecast here?
Okay, so basically what we did in our supply-demand model is we estimated what would be the regional growth in the organic demand from each region. And based on the growth that we estimated for each region in demand, we got a demand curve that is going to be basically an inelastic demand growth, as we can see here in this graph. So basically what we did is, based on each year, we would have a limited demand that would grow. Basically, we sensibilized this by the region growth of each pulp demand. And regarding the supply, we basically included all the announced projects that would impact the market, and equaling supply and demand based on the cash cost of those new projects, we would reach this 575 balance in the market by 2025. So this was the long-term price that we used in real terms, so adjusted by US CPI in our forecast.
I'd like for you to talk a bit about what you think needs to be the catalyst for the market to recognize that the share price. You've certainly talked through, the solid business, other aspects, but what needs to happen for, your target price to be achieved?
Okay, so if you can please go to page 96. So what needs to happen is specifically the three pillars of our thesis. First, the market needs to recognize Suzano's moat and how the company is protected from, first, the rise in prices that we mentioned, and second, that the company has, because of the high on farmland prices, there is not a risk of oversupply, at least in the recent years in Brazil. So if the market soon recognizes it, it's the first catalyst. Second, okay.